Good evening. This is Ken Long from Tortoise Capital Management with the weekend report. Looking at the strategy report to begin with. We are at bull quiet and at the upper end of normal on an annual basis and slightly overbought on a 10-day basis. The percent stretch above the 200-day moving average and the slope of the 50-day moving average are both exceptionally strong in the green. ADX, the trendiness, is up above 27.8 now. That's a strong positive trend. And our volatility is at historic recent lows at 0.56%. I expect that to change here in January pretty quickly. U.S. continues its domination of the rest of the world's performance, although we're going to see a slight cooling off this past week. There are some segments of the world that are starting to emerge, and we'll take a close look at that potential transfer of power. Monthly rebalancing, the 331 system remains in the Qs, MDY, and IWM. Next evaluation on or about 1 February. The quarterly rebalancing, 333, buys the same symbols. The ETF2 exposure increases its recommended exposure to 100%, and in the sample model, we'll be adding EWY South Korea. Moving on. You can see a quick summary of the symbols in the monthly and quarterly rebalancing. Looking at the market health check, bull quiet. Slope of the 30-day regression line very steep. We had a couple days of pullback. But price is still better than the 20, better than the 50, better than the 200-day moving average, and that's very positive. And the slopes of all of those moving averages are up. You can see we remain slightly overbought on a 10-day and an annual basis using Williams %R. Summary of the indexes from the ETF2 report. You can see that U.S. is slightly better than the rest of the world, although we can now see that the emerging markets are starting to show a little bit more strength now relative to SPY. The model, all 10 ETFs are positive on the 5-week rate of return, so the theoretical model exposure is 100%. End of the year benchmark review, the ETF2 was almost 3% better than the S&P with less volatility, and we like that. It beat the passive ETF strategy by a fraction, so all systems go. In the extended world market model, blended commodities and gold have resumed their strength, and we'll see a one-day really positive performance in oil. In the U.S. sector spiders and in the global sectors, we'll see that materials and energy are strong in both the U.S. and in the globals. In the world market model, again, this uses the STR rating. We can see that the U.S. has cooled off a little bit, and including the growth side. We will see that it was not a significant pullback. It was just it failed to follow through this last week. And there were a few selected areas of strength, like in Asia, with Taiwan, South Korea, and Malaysia, and then Brazil, Austria, Sweden, commodities that money seemed to be cycling into a little bit. And so they started pulling ahead. However, across the board, the U.S. has been stronger than the rest of the world, and that remains the same. In the 100 by 200 crossover system, we still have a predominance of buy signals around the world now. The rest of the indexes have caught up, with the exception of just enough weakness in Europe and in the Euro-Asia large caps to keep things from being uniformly green. I would also point out that the defensive sectors of utilities, healthcare, and pharmaceuticals are still lagging, and so that may be an area where on a sector rotation basis we start looking for some seedlings to start popping up. The top 30 ETFs in the ETF2 database remain dominated by commodities, precious metals, and we're starting to see some of the selected companies in the emerging markets coming back to the top, like Taiwan, South Korea, South Africa, Malaysia, Chile, and then the balance of this being energy and material sector. Silver continues just to lead the way. It made a all-time new high this week, and so it's poised for continued growth. The top 25 ETFs by daily dollar volume remain the same, again with the most volatile intraday ones being good trading candidates like Brazil, the treasuries, gold miners, oil services, barrel of oil, and metals and mining. Quick review of the ETF2 mechanical model, or the theoretical model. Again, you've seen this chart before, and because we can have one additional position, we're looking at adding EWI at the start of the year, and that will get us fully invested. And that's the weekend strategy report going forward. All systems go, bull quiet. We want to be long and strong in the winning sectors, and right now that remains dominated mostly by the U.S. Commodities and basic materials. And thank you for your support this year. Looking forward to the year ahead.